Thank you for tuning into another CSE issuer update. Today, I am talking to Paul Rosen. Paul is the CEO of 1933 Industries, Vegas-based cannabis company. Paul, thank you so much for your time. How are you?
I'm really well. Thank you so much for having me on the show today.
Absolutely. I always learn a thing or two when you're on the show. So, I want to start off with, we're already into mid-February of the new year. The company has released some results over the last, the last month. Why don't I let you begin by talking to us a little bit about your first quarter results?
So, one of the many challenges of a public company is your reporting results that, to your point, are already reflecting things that have happened in the past. Yeah. So the quarter, our Q1 2023 ended on October 31st. So it's a little bit dated, but as a pubco, they are the most recent financials that we've released. And it was even for me, who's usually pretty guarded in my enthusiasm for where our quarters, because they always think we should be doing better and can do better. It was a bona fide good quarter for us in the sense that our revenue, we achieved about $5,640,000 of revenue. And just to put that into perspective, and that's a 129% increase from the same quarter a year ago. And even maybe more relevant on a time scale, it's 116% increase over the previous quarter, which was our Q4 2022. So for the last few years, we have, as an organization with great leadership, not provided by myself, but provided by many of the senior managers in the company, have been working towards sort of a proof of concept quarter that we can grow our revenue. And that was a good indication. I don't think the job is done by any measure, but certainly it was validating and encouraging to put up a number that was really well ahead of any revenue we've almost ever done as a company. Other things that I think are important to note about that is that we had an adjusted EBITDA profit of $100,000, which is not great, but a lot better than many cannabis companies that are not yet reaching that milestone. And again, a business needs to be profitable in the long term for it to have value. That's not a very controversial concept. And as you know, the industry has struggled towards profitability. So for us, just to have a positive EBITDA quarter gives us a lot of confidence and satisfaction. It's not enough. We're going to need to improve upon that significantly. Gross margins were $2 million on 5.6, so a pretty healthy gross margin. If we pay attention to Canadian issuers, some of them are struggling to have positive gross margin at all. And so I'm pleased to say that we're still in a comfortable gross margin perspective. And our GSA was probably the lowest it's ever been. So that combination, highest revenue in company history, one of the lowest GSAs in company history, it indicates a certain amount of efficiency and discipline. It's not to say even remotely that I would be satisfied with these results. I'm encouraged by them, though.
It's definitely encouraging because that leaves you and your team in a strong position for the rest of the year.
That is the plan, definitely. It's a day-by-day thing, as we all know in the industry. When you're growing plants indoors for a living, it's very, week by week. You really can never sort of go on cruise control or autopilot, but we're confident and enthusiastic about the full year in front of us.
Paul, I want to jump to talking about the cannabis market in Nevada. There's been some changes that have been happening. A lot's been actually happening, to be honest with you, not some. But why don't you talk to us a little bit about what's happening in Nevada?
Yeah, it's a pretty healthy market overall. It definitely has had a down year, and that's macro data that the last year had dropped in revenue from the year before. I think I'll say this, and this is true of Nevada and it's true of other mature markets, is that there was a real spike during the pandemic in cannabis consumption, and that was augmented by a number of factors. It turns out, as I've said before, that when you pay people money and they get to stay at home all day, they tend to increase the consumption of all sorts of what we might call vice products. Alcohol, cannabis was no exception. And in the case of cannabis, I think a lot of people found relief from anxiety and stress. And also Nevada, even though the dispensaries had opened, it was open for business. In America, it was one of the more open states. So it had a surge of tourism all the way through 2021, which helped a lot of them numbers. Macro, the industry took a step back. By that, I mean there was less money spent on cannabis in 2022 than there was in 2021. And we've seen at an operator level some failures. We saw Flower One go into receivership. We've seen Fiora Growth go into receivership. And I would say even companies that haven't reported or private were aware from having our ears to the ground that there has been some consolidation on the supply chain. And by consolidation, I don't mean companies coming together. I mean companies dropping out of the game. It's not to say they can't come back. Flower One apparently intends to come back. I just mean it's a good indication about some of the disruption in the industry. One of the things about Nevada that is underlooked, though, is that it is on a basket size still one of the larger markets. I think it's the second largest market after Colorado. There was just some data around that. So our view in 1933 is there was a lot of price compression over the last year. If we had been able to combine the units sold in Q1 2023 with the average wholesale price of a year and a half ago in 2021, we would have put up a blistering number. So we're proud that we achieved that number in an climate where there has been a lot of reduction in price compression. The cost of wholesale flower at a wholesale basis is almost half of what it was a year and a half ago. So despite that, I would say we found a floor in the industry. The so-called race to the bottom is, in my opinion, stopped, and we may even anticipate possibly some increase in wholesale prices in the year to follow.
Paul, are you speaking on that topic? Are you able to maybe talk a little bit or even hint at what you and your team are doing to combat price compression?
I mean, our view was, you can't fight it. You should get in front of it. And so pretending that it's not happening and being sort of like stubborn and demanding that, listen, this is our price, and if, buy it or else, right? In this market, that for us would have been, I think, a recipe for a drop in sales. So obviously everyone wants to sell their product at the highest price if that sells the product. But the moment you're not clearing through, and we're a volume producer, we're one of the larger indoor grows in the state. And our view, when I think it's made AMA a top brand, in fact, I know it's made AMA a top brand, that's Headset at BDSA reporting, AMA being 1933's cannabis brand, is that, we're a mid-value brand. We know what we are, and we know who we are, and we know what our customers expect. And I would say the customer experience around AMA is fantastic in that people love the product and it's affordable. And I think that was a very clever strategy that our sales department, which is just get in front of this. Not everyone would rather prices be higher, but it's key for us to sell all the products that we produce, which we're doing right now.
Well said, Paul. Now, towards the end of last year, there was also an okay for consumption lounges in Nevada. Let's talk a little bit about consumption lounges and if you and your team have any plans for that space, to enter that space.
Yeah, I mean, I think so just in terms of entering the space, as you may know, or as our listeners may know, every dispensary or dispensary group, I should say, has, as of right, an opportunity to open a consumption lounge. And that's one lounge per group, not one lounge per location. So for example, some of the MSOs have maybe 5, 6, 7, 8 dispensaries. They're entitled as of one. So we ourselves are not a dispensary operator at the moment, and therefore we certainly couldn't qualify to open a consumption lounge. Also, independently, you can apply and get approval, as has already happened, to open a consumption lounge not attached to a dispensary. We also made the decision not to pursue that license because I think I'm a big believer in specialization and staying in your lane. We would, of course, love to own a dispensary, although it's a different skill set than being a wholesale cultivator processor. What I think is exciting, though, is, and this goes back to the macroeconomics, the price compression and the hope that prices are going to go up, is anything that adds to the demand stack is good for the market, obviously. We know that price is a reflection of like supply and demand. I remember that from my 1982 economics course at University of Western Ontario. And if demand goes up and supply is stable, prices go up. Or if demand is stable and supply goes down, prices go up. If demand goes up and supply goes down, prices really go up. That's pretty unassailable. So what we are hoping and imagining, and it's just speculation because they haven't opened yet, is that there's going to be more consumption, just straight up. More people will, there will be more cannabis consumed in Nevada through the regulated market post-consumption than there was pre. Furthermore, Nevada is really going all in on this. That is to say that they are, I think, seeing a path towards creating another type of attraction for the people that love to come to Las Vegas. And as we know, Las Vegas is a city built upon spectacle and attraction. Yeah. And anything that can add to that aura when results in more people deciding, another reason to go to Las Vegas. So I think it's going to be really good for the industry. I don't think it's going to be transformative, like everything's just going to go haywire, but I see it as a really, really, really good trend. And I see it as a trend that if Nevada succeeds, and by success, I mean that the whole industry succeeds, the consumer's happy and the regulator's happy, then I think you're going to see this, carried out in other states. Right now, there's only a handful of states that have consumption. Even the ones that do haven't really succeeded on it. I'm hoping that Nevada, we're going to get some of those incredible nightclub operators, which I think are jumping in to create really powerful, immersive experiences. It's one thing to go into like a small, not well-lit, stinky room, not like the basements that I used to smoke pot in when I was growing up and consume. I don't think that's really going to shock and awe people. But if it's like Tao Group or, just big, well built out, well designed with plush upholstery kind of environs, then I think it's going to do really well. And I think it's going to likely result in the proliferation of consumption. And it may be that consumption is where people go. One thing about Nevada is that if you are a consumer and you go to a dispensary, it's almost nowhere to consume your product if it's combustible. The hotels won't let you smoke in your room for good reason. It's illegal to smoke on the street. So where do you go when you're a tourist? People are like standing behind buildings. Not a very pleasant experience. So I think the consumption is going to be outstanding.
I can't wait to see what Nevada sort of works out and has in store when it comes to that space. Now, Paul, let's talk a little bit about the state of cannabis in the U.S. in general. And then, I want you to touch a little bit on your predictions on regulations and where we might be headed.
Yeah. I mean, not to be like a Cassandra here, but it's not great. Can I say that? The industry is not doing great at the moment. Never mind the stock prices. That's a whole other, tale of woe for like every single reporting issuer out there, from the biggest to the smallest. But the business of cannabis, I think it's going through a little bit of a growing pain. And I'll even reference Canada, where we've seen, even this many years into our program, which is, just for record, like 11 years since we had the MMAR, the commercial medical program, and we're coming up on the 5-year anniversary of REC. We are still having a lot of disruption and turmoil. Anyone that read Canopy Gross earnings would certainly see evidence of that at the high and the low, from small to large. So every state, we know the difference in America, every state is its own microeconomy. And generally, like the new states that are coming on, there's promise. Like a New Jersey looks good right now, because like every new state that opens, there's usually at the beginning of a program, a shortage of product. There's not enough resellers, not enough wholesale, not enough cultivators. So prices go up. But as markets mature, what tends to happen again and again is we go from chronic undersupply to chronic oversupply. And there's a number of reasons for that. But the fact is, it's an occurrence right now. And so I do feel that the positives to take away in the U.S. cannabis industry is that consumption is holding steady, if not going up. More people that haven't tried cannabis before are trying it and seeing it as a healthy alternative to other substances they may imbibe, like alcohol, or perhaps even more serious narcotics like opiates. That's a great sign. It's being well socialized. And I think the conditions are there for a huge industry to be even larger than the alcohol industry. The regulator is not helping. Can I say that at a national level? The biggest threat to the regulated market is the legacy market. And then ideally, we just have one unified market where legacy operators could come in and add value, because God knows we need their intellectual capital. In my opinion, the regulated market has not given enough homage and respect to the legacy market in terms of what we can learn. But right now, when we overtax and overregulate, which is pretty much the norm, we really make it hard for the consumer to choose our product, because they can buy, in their view, and competitive product, maybe not as good and certainly not as tested, but they can buy a competitive product for sometimes half the price. And at some point, we're going to have to address that. If this was a fair fight, meaning to say that we could compete on a more or less level playing field, and yes, we'll have testing costs, and yes, we'll have some regulatory costs, but not to the point we do, and we certainly should not have any excise taxes on the cultivation. The consumer would, in my opinion, undoubtedly be willing to pay 10, 15, maybe 20% more than the legacy market, just for the authenticity of knowing that a third-party lab tested the product. That alone, it's like there was an old commercial, I think, from Weed Maps years ago about a guy selling sushi out of his trench coat in a parking lot. And he's like, would you buy your sushi from this person? Largely not, but they were saying, like, why would you buy your cannabis from an unregulated source? And the answer is because it's half the price or a third of the price. If there was even remotely the same price, the regulated market would suck up a huge amount of new customers, and then it will become a massive, dynamic, profitable industry. And I'll say that's inevitable that's going to happen. It's just a question of when. Regulators, sorry for this screed. The regulator has to sort of use what would be called supply side economics, going back to the Reagan era, is that you can grow the pie by taxing it less, period.
Paul, I always appreciate your insights into the overall industry. I want to jump back into 1933 for our last little bit here. Now, why would you say that 1933 is an investment opportunity, and why should investors be looking and holding on to this?
Well, I hope they buy the stock. I think it's undervalued. Now, I don't think there's many public CEOs in the world that would get up on a lectern and say their stock was not undervalued, but I think using comparative measures were undervalued. And I'll make the case pretty succinctly, just using large data points here. Our market cap, I haven't checked it today, but more or less, we're going to call it around $10 million Canadian. Yeah, that's about right. And our revenue in Q1 2023 was $5.64 million. So on that rate, our market cap is less than 2 quarters. Now, even in the compressed public market status of cannabis, that's a super discount to what would be the median. The median is right now anywhere between 1.5 to 2.5 revenue. So I think that there's value in terms of where we are, in terms of the discipline and the risk of the company. I would point out the following. The company has lowered its debt load over the last 2.5 years from about 10.5 million, 11 million, 12 million, I should say, Canadian, to just around 3 million Canadian. And that's unsecured debt. That's a really, really important point. So we do not have any secured creditors in the company right now. And we've managed to protect our cap table in the last 2 years. The company has not issued, other than converting debentures, the company has not done a treasury raise in 2 years. It hasn't taken on any new debt since I've been the CEO, which is almost 3-year anniversary right now, and has a relatively clean balance sheet. And I'm going to just say this loud and clear, and this is, we're open for business in the sense that we're now looking and inbounding and outreaching some, I think, potentially accretive M&A opportunities. Now, that's not a guarantee that that's going to happen, but I can say it is the will of management to explore and to seek if conditions are appropriate. So I certainly feel in my mind, and I've bought some of the company stock over the last few months myself, and I intend perhaps to buy more. I think we're undervalued, and I think that we're being pretty well run right now, and we've avoided a lot of the self-inflicted errors that a lot of other cannabis companies have imposed upon themselves.
Paul, congratulations on the upcoming anniversary of being the CEO of the company. You said it was 3 years now?
It will be in June. That's right.
Great. Like always, I really appreciate you taking the time to join myself and talk to your existing investors and potential investors and our audience about 1933 Industries, what investors can expect from you and your team in the coming months. I look forward to having you on, hopefully just after summer, where we can provide another update. But again, thank you very much for your time. To everybody watching, you've been listening to Paul Rosen. He's the CEO of 1933 Industries, Inc., trades on the CSE. Paul, thanks again.
Thanks, y'all.